So we just wrapped up the third quarter of this year, and all of our funds had very strong performance. This is across our equity funds and across our bond funds. So among our equity funds, our Caribbean Growth Fund was up about 7% this quarter, and our World Growth Fund was up about 9% this quarter. So driving that performance was the underlying Fortress Global Funds, and they saw gains between 7% and 12%. The International Equity Fund led the performance there. There was moderate stock performance in local dollar terms, but then when we combine that with the currency strength in the Japanese yen, euro, and pound against the US dollar, that helped to cause that fund to outperform this quarter. Our emerging markets fund also performed well, and much of this performance came in the last couple of weeks. The Chinese government announced a number of stimulus measures to boost the economy, and so Chinese stocks surged about 20% over the quarter. Because we have a number of Chinese stocks in the emerging markets portfolio, that really boosted performance in that fund. Notably, though, after some time of leading, the US equities underperformed this quarter. US stocks showed moderate returns relative to the rest of the world. And in the US, value stocks outperformed growth this quarter, which was a reversal of a trend that we saw in over this year. The best performing stocks in the US had bond like characteristics, and those are typically what we would expect to do well in a rate cutting cycle. The tech stocks that were the darlings of the performance for this year lost a bit of momentum this quarter. Caribbean stocks unfortunately remained a drag on the performance of the growth fund, and this quarter it was particularly those in Trinidad. So we can shift our focus a bit to bonds. The Caribbean High Interest Fund and the World Fixed Income Fund were up 3 and 4% respectively for this quarter. The US Federal Reserve started their rate cutting cycle this quarter. That led to a decline in yields or a decline in rates. And usually, when rates fall, bond prices rise. So we saw price increases of our bonds. During the rate hiking cycle, which was before the cutting cycle, we added a number of bonds to the portfolio. So we were able to lock in those very high coupons. Now our bond portfolios are benefiting from that coupon income, plus we're seeing higher prices as yields fall. So that is it on our performance for the third quarter. It also happens that the end of September is the fund's year end. Over that 1 year period, September to September, the Caribbean Growth Fund and the World Growth Fund were up 12% and 24% respectively. And our High Interest Fund and the World Fixed Income Fund were up 7% and 9% respectively.